you're a pure play equity house in that sense. Would you tell a person that you have no option, you have to have some amount of your assets in equity? Is that a view you hold? And because if you really want to beat inflation, you want to build wealth, a lot of the questions we get these days are from young people, Ashish, who are looking to invest either for their retirement or for their children.
Yeah.
So you're talking of a 15, 20, 25-year time horizon. I hope they stick to it, because sometimes, we all say that I'm going to invest for this long. But at least if you remember earlier, when people said long term, it was 1 year, 1.5 year. At least now people are saying my long-term horizon is 20 years, 30 years, 40 years. Now with that kind of a change and shift in attitude, do you think that with that time frame, equity becomes the best bet?
Yeah, I think people have always been saying that they invest for long term, but the moment there is a 10% downdraft, then the definition kind of just goes out of the window and we start assessing our portfolios. So clearly that perspective has to be kept in mind that, over the next 10 years, 15 years, if somebody guides me that I should get 10-12% CAGR in the equity and maybe a good fund should outperform, then we should be very clear that we have to first of all stick to the time horizon which we indicated. And second of all, assess people over a particular time horizon rather than every 3 months or 6 months. And the third thing is that whatever the return you're anticipating is not going to be straight line. It's not like 10, 10, 10, 10 and 10. It will be minus 20 and plus 25 and minus 7 and plus 4, all those kind of numbers. So we have to stay through all of that. And I think investors need to have that perspective in mind, that they don't shift the goalpost just because the market is doing something crazy.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.